it came seeking a remedy for a comparative small evil, and an evil infinitely more dangerous. To cure disease, temporary in its character, a corrosive poison was administered, which ate out the vitals of French prosperity. It progressed according to a law in social physics, which we may call the law of accelerating issues and depreciation. There you go. It was comparatively easy to refrain from the first issue. It was exceedingly difficult to refrain from the second, to refrain from the third, and those following was practically impossible. Friday, July 4th, 2025, Maneco 64, home of alternative economics and contrarian views. Well, first off the bat, I like to wish a happy 4th of July weekend for my American viewers. Yes, we've come to Switzerland for the summer holidays. Rudy is fine. He's staying with the family that he stayed at Christmas. He's doing really well. And I want to talk a little bit about the Rudy collection in a second. But what we're going to talk about today, though, is whether the U.S. can grow out of the debt predicament that it's in. It's the most massive debt in the history of the world. 37 trillion just in the national debt, not to talk about the unfunded liabilities and all the other stuff. And I don't think the prospects are great, even though that's what the big, beautiful bill is going to try to do. That's what President Trump is saying. We're going to grow out of this. It's never been done before in the history, recorded history in the last few thousand years. No country's ever been able to grow out of debt with more debt, because that's basically what it is. Yeah, that's what we're going to look at, and I'm going to refer to fiat money inflation in France, and then we're going to look at the markets, gold, silver, the dollar, commodities, and what I think all this means to the markets. As for the Rudy collection, Karen is, she's organized a raffle, so if you were to buy something from the merchandise store from the Rudy collection by the end of July, you will be entered in a raffle, and you could win a silver coin worth up to $50. So just to let you know, yeah, this is not political. What I'm talking about here, this is about history and economics, and the fact that no country's ever done this before. There's hundreds of different countries that have inflated their currencies, and it always ends in the currency collapsing. It's as simple as that. No country's ever grown out of the debt before. Could the current Trump administration succeed, and Congress? I'm not too confident about that. But anyway, what I'm going to do here is go through what Andrew Dixon White says about inflating one's currency, what it does. So this is towards the conclusion of the book, which I highly recommend. And I'm going to put a link, a PDF link in the description to it. You can read it for free. It says, I have now presented this history in its chronological order, the order of events. Let me, in conclusion, sum it up briefly in its logical order, the order of cause and effect. And first, in the economic department, from the early reluctant and careful issues of paper, we saw an immediate result in improvement and activity in business. So I would add that this debt tsunami that the U.S. and the world has accumulated, of course, has grown in particular since 1971, when the world's monetary system was detached from gold by President Nixon, and it hasn't been fixed since. And so this is how you have to look at this you have to look in that context. Then arose the clamor for more paper money. At first, new issues were made with great difficulty, but the dike once broken, the current of irredeemable currency poured through. Well, that's fiat currency, irredeemable, and the breach thus enlarging this currency was soon swollen beyond control. 37 trillion, hundreds of trillions in unfunded liability, derivatives, quadrillions in derivatives. It was urged on by speculators for a rise in values. Melt up by demagogues who persuaded the mob that a nation, by its simple fiat, could stamp real value to any amount upon valueless objects. As a natural consequence, a great debtor class grew rapidly, and this class gave its influence to depreciate more and more the currency in which its debts were to be paid. The government now began and continued by spasms to grind out still more paper. Commerce was at first stimulated by the difference in exchange, but this cause soon ceased to operate, and commerce, having been stimulated unhealthily, wasted away. Manufacturers at first received a great impulse, but ere long, this overproduction and overstimulus proved as fatal to them as to commerce. From time to time, there was a revival of hope caused by an apparent revival of business. Sounds familiar? But this revival of business was at least seen to be caused more and more by the desire of far-seeing and cunning men of affairs to exchange paper money for objects of permanent value. Well, yeah, the flight to hard assets. As to the people at large, the classes living on fixed incomes and small salaries felt the pressure first. As soon as the purchasing power of the fixed incomes were reduced, soon the great class living on wages felt it even more sadly. Prices of the necessities of life increased. Merchants were obliged to increase them, not only to cover depreciation of their merchandise, but also to cover their risk of loss from fluctuation. And while the prices of products thus rose, wages, which had at first gone up under general stimulus, lagged behind. Under the universal doubt and discouragement, commerce and manufacturers were checked or destroyed. As a consequence, the demand for labor was diminished. Laboring men were thrown out of employment and under the operation of the simplest law of supply and demand. The price of labor, the daily wages, and laboring classes went down until, at a time when prices of food, clothing, and various articles of consumption were enormous, wages were nearly as low as at the time preceding the first issue of irredeemable currency. The mercantile classes at first thought themselves exempt from the general misfortune. They were delighted at the apparent advance in the value of goods upon their shelves, but they soon found that as they increased prices to cover the inflation of the currency and the risk from fluctuation and uncertainty, purchases became less in amount and payments less sure. A feeling of insecurity spread throughout the country. Enterprise was deadened and stagnation followed. I would also add that Trump is not trying to stop the inflation of the currency. And why is that? Well, he's calling for more aggressive rate cuts. So it's going to continue. New issues of paper were then clamored for as more drams are demanded by a drunkard. New issues only increase the evil. Well, this is what the big beautiful bill is. New issues. 5 trillion more in the debt ceiling, the more deficit spending. That's the new issue. Capitalists were all the more reluctant to embark their money on such a sea of doubt. Workmen of all sorts were more and more thrown out of employment, issue after issue of the currency, but no relief resulted, save a momentary stimulus which aggravated the disease. The most ingenious evasions of natural law and finance, which the most subtle theorists could contrive, were tried. Yeah, all these excuses, right? Growing out of the debt, all different theories, all in vain. The most brilliant substitutes for the laws were tried. Self-regulating schemes, interconverting schemes, all equally vain. All thoughtful men had lost confidence. All men were waiting. Stagnation became worse and worse. At last came the collapse, then a return by a fearful shock to a state of things which presented something like certainty of remuneration to capital and labor. Then, and not until then, came the beginning of a new era of prosperity. Just as dependent on the law of cause and effect was the moral development. Out of the inflation of prices grew a speculating class, well, the hedge funds. They've been growing for the last 30 years or so. And in the complete uncertainty as to the future, all businesses became a game of chance, and all businessmen gamblers. In city centers came a quick growth of stock jobbers and speculators, and these set a debasing fashion in business which spread to the remotest part of the country. Instead of satisfaction with legitimate profits came a passion for inordinate gains. Well, the cryptocurrency, to the moon. Yes, the stock market everything's at all-time highs right now. Then too, as values became more and more uncertain, there was no longer any motive to care or economy, but every motive for immediate expenditure and present enjoyment. So came upon the nation the obliteration of thrift. Yes, obliteration, that old word, right? In this mania for yielding to present enjoyment rather than providing for future comfort were the needs of new growths of wretchedness. Luxury, senseless and extravagant, set in. This too spread as a fashion. So I'm going to come to the important part here about irredeemable paper and what Andrew Dixon White says. That was the history of France, logically developed in obedience to natural laws, such has, to a greater or less degree, always been the result of irredeemable paper created according to the whim or interest of legislative assemblies, Congress, rather than based upon standards of value permanent in their nature and agreed upon throughout the entire world. Such, we may fairly expect, will always be the result of them until the fiat of the Almighty shall evolve laws in the universe radically different from those which at present obtain. And finally, as to the general development of the theory and practice which all this history records, my subject has been fiat money in France, how it came, what it brought, and how it ended. It came seeking a remedy for a comparative small evil, an evil infinitely more dangerous to cure disease, temporary in its character. A corrosive poison was administered which ate out the vitals of French prosperity. It progressed according to a law in social physics, which we may call the law of accelerating issues and depreciation. There you go. It was comparatively easy to refrain from the first issue. It was exceedingly difficult to refrain from the second, to refrain from the third, and those falling was practically impossible. So this is not the end here of the big beautiful bill. Uh, you're going to see future Congresses, if we get to that, try to keep increasing, and the excuse will always be we're going to grow ourselves out of this predicament. But I would say the chances of that happening are minimal, almost nil. I would hope it wouldn't, but I don't think any nation is immune to being able to break this this natural law of economics. Anyway, doesn't mean to say things are gonna get never gonna improve, but I think we need to be very careful with what's going on, and that's why I want to talk about the markets now. Um, and I think they're all pointing to things getting more and more inflated, for the dollar to become worth less and less, and all other fiat currencies. And that's going to be reflected through the price of gold, through the price of hard assets like commodities, gold, silver, even the stock market will do well, but I think the currency will drop faster than the stock market goes up, or we could see the stock market correct down, maybe not in fiat dollars, but in terms of real values like gold and other commodities. In all the charts, as you can see here, I'm going to start with the bond market, and we're looking at prices now instead of yields. We've been consolidating for almost 3 years in the bond market after a huge drop from 2020 to 2022 that I think ended the bull market in bonds that we had since 1981. And I think the next move will be lower in prices and higher in yields. I can't tell you when it's going to happen, but I think, of course, we're getting closer and closer. And the same thing for the CRB index. It's the reverse of the bond prices, as you can see here. We made a big bottom in 2020, and it took off, and then it's been consolidated since 2022, but a lot of different commodities are picking up now, and I expect the CRB, which is a basket of all commodities, to go even higher. And I think that's what gold has been telling us for the last year and a half, that this is coming. Gold is always the canary in the coal mine, so to speak. And the same thing goes for silver. And the dollar, I don't have to tell you either. Yes, it has come down as per the dollar index, but the major thing here is that the dollar is going to continue to drop versus real money, i.e. gold, and so will all the other currencies, even the Swiss franc. Yeah, the Swiss franc is the best of a bad bunch, but it's also going to depreciate massively versus gold. And yeah, this is where I'm going to end for the day. As I finish here, I can see the markets are open. We can see that gold is up slightly here, up 0.5% at 33.41. Silver is unchanged. The stock market is lower. And by the way, it's very early. It's 5:25 London time, 6:30 Switzerland time. I've had to get up early because things are quiet right now where I'm staying, so I can do this with no disruptions. And I'm going to be interviewing someone really interesting who I've interviewed before later on today, and this interview will be posted tomorrow, Saturday. What else? What about those job numbers? I didn't think they were that good, actually. Underneath the surface, they're very weak, but the bond market didn't react very well, which is worrying. I would have thought the bond market would have rallied even a bit on those numbers. I saw the unemployment rate went to 4.3, which is a level that's the highest in the last few years. Need to keep an eye for next next month's jobs data. If we go to 4.4 or 4.5, that's a bad sign. Yeah, and I'm going to end it right here. And with that, I'm going to wish you all a very good day. Take care. Bye.